Welcome to the RANsquawk End of Week Wrap, and we're just going to answer a couple of your questions that have been sent in and give you a little outlook of what to expect for next week. So the first thing we're going to look at is Thursday's ECB conference from ECB President Trichet. So looking at some of the comments from this, one of the main factors that came out of this conference was Trichet saying that the ECB would look to restart its bond buying programme. So this will have particular impact on Italy and Spain, with JP Morgan forecasting that Italy may well run out of cash in September, and they also expect Spain to run out of cash potentially in February. So there has been some talk that the ECB would look to be buying Italian and Spanish bonds to prop up their markets. In fact, we are likely to see a Berlusconi and Tremonti press conference in just over half an hour's time, in where they are expected to agree some measures, and the ECB have stated if these measures are sufficient then they would look to buy Italian bonds. So it is worth noting that Italy does break up for Parliament this weekend, so it will be very interesting to see what the continued effects will be next week. We have also had some comments from EU's Olli Rehn that not all the Eurozone member states have agreed on the EFSF and also on the ECB for buying back bonds. In particular, there has been some dissent from Germany, who are some of the largest bondholders in the Eurozone, and they have the largest exposure to these bonds. So another question we're going to look at is this dramatic sell-off that we've seen in the equity markets this week, with some real weakness in both the Eurozone markets and also in the US markets as well. European markets are down over 10% for the week. We also see their US counterparts down a similar amount as well. So all of this weakness, particularly in the US, started last Friday when we had the US GDP advance figure come in. So this did show some dramatic weakness there, and we also had a revision to their Q1 figure as well. So this did initially spark some real fears of a US economy slowdown and hence a global economic slowdown as well. So this did see some weakness, particularly in US equities, and this has carried on at the beginning of the week. It then escalated following Trichet's press conference when he said that he saw substantial downside risks. This was really the catalyst for a lot of yesterday's selling. In terms of what we've heard from our contacts, we hear some CME desks saying that they have been requested to ask their clients to scale back on their position sizes. So a lot of their large clients have been asked to reduce the size of their positions. We have also heard of some position liquidation and a few margin calls as well. So this has aided the selling. We're also hearing from some of our program trading sources of a substantial increase in program trading over the last couple of days, with over 80% of the volume generated from these sell programs. So we've seen a lot of sell program activity in the markets, in particular the E-mini S&P. Now the final question I wanted to answer is regarding US QE. So there has been a little initial chat about further QE out of the US, and we expect this to start picking up next week. We have the FOMC meeting and Bernanke's press conference following the rate decision. This is scheduled for Tuesday, so it will be highly anticipated. So expect some positioning into this and a lot of chatter doing the rounds in the lead up to this and post this as well. So we're really expecting all that further QE talk into this and post this. So it's unclear at the moment what this further QE may constitute, so that there isn't really any clear indication. We have heard some early talk that it may be the purchasing of longer dated securities rather than the mid-range securities that we saw this recent batch of QE2 attempt to buy back. So they're talking of buying back the longer dated securities there. So a date worth putting in your calendars is the 26th of August Jackson Hole meeting. So this is where the Fed did announce QE2 last year. So it will be on that yearly anniversary date of that. And that's what we'll be really looking out for. But expect the momentum to start leading up into that number as well. It is also worth noting that Goldman Sachs also revised the US growth forecasts down for today. So this is for the rest of 2011 and for 2012 as well. So this is seen as potentially a catalyst which may bring the Fed into action on potentially some further QE. So we'll definitely be looking out for that. So that's it for this week. We hope you've enjoyed the video, and we look forward to bringing you further commentary and videos next week. We hope you have a great weekend from everyone at the RANsquawk team.